Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Wednesday, May 16th, 2012 is sponsored by RealTick. All right, let's get right into it, guys. Markets are near the lows of the day, but we're trying to hold the pivot double bottom from yesterday. And again, you can clearly see these two trend lines right here, and that's exactly what the market is hovering just above as we speak. And again, that's the low from yesterday. You can see we hammered it here, then we had a sharp bounce on the FOMC minutes that were just released. Then we came back in, went lower, bounced again, and are still holding this pivot low. So that's the big question today, folks. Can the low from yesterday hold today? If it does, if this market can hold on, you could see a bounce back up. Remember, the key to this market has been the late day selling. Every day, if you look at every day over the past week or two, you see we basically topped out mid-morning, midday-ish, and have sold the rest of the day. Here the markets are hovering at their lows, and it is only a little after 2 p.m. Eastern Time. So again, can the markets hold here? If they can and they don't break down, that would bode positively for the end of the day as well as into tomorrow. If they break down here, this market's done. Continues lower, continued to sell. More bad news out of Europe continues. The ECB talked about limiting some of the money going to some of these Greek banks because obviously with the government not forming, they're in even more of a mess. It is just not a pretty scenario. However, again, the Fed just came out in FOMC policy statement minutes and said that they are not opposed to easing further. That's the most clear signal that the QE3 policy could be on the table at any point in the future. And it wouldn't shock me one bit to see that come out in the near future as a legitimate thing from the Federal Reserve. We all know QE3 is coming. It's just a matter of when. The more Europe drags on the U.S. economy, the more Europe gets ugly, the more likely this comes faster. Okay? So that, again, is where we sit on the SPY. And, again, I'm watching like a hawk this area right here, basically the low, to see if we take it out on a closing basis. So far, we've hit this level a couple times and bounced each time. I don't know if they can keep it up. A lot of people don't like to hold into the overnight session when Europe opens, and if that's the case, you could see this market break through the downside. Again, if it doesn't, I think that bodes positively for the markets, but again, we'll know over the next basically hour and a half into the 4 p.m. close on this U.S. market session. Going to a couple other charts, Apple has been weak all day, down $6. Not a pretty fall on Apple. We talked about the key pivot here, guys, and again, this essentially was broken yesterday. If I just put my trend line there, that was your pivot area. And again, that has seen a drop. Without Apple supporting this market has a lot of trouble going higher. I mean, it's just that simple. I mean, look at what the market's done ever since Apple topped. I mean, here Apple topped on April 10th. All right, April 10th was the high. If you go to the SPY daily, when did the markets top? Right in around the same area, early April, right here. And ever since then, look at the markets. Why? Because the Apple chart has dumped out too. I mean, when you have Apple, which is 20% of the Qs falling, it's very tough for the market to get a bid. I mean, you have to have a lot of upside from other stocks just to have a market that goes higher. Okay? Looking at a couple other charts here, let's take a look at JP Morgan Chase. JPM is down 22 cents on the day. This stock gapped up again today and just could not hold. Just like yesterday, it could not hold. The one level I am keeping a close eye on is this pivot low. I think this would be a good afternoon scalping opportunity, and that's at the 3580 level. 3580 level should be a good area on this chart if JPM comes into it for a bounce. That is a gap fill pivot low going back basically after the news, going back to Monday's lows there. All right, and again, you can just draw that line even further across the beginning of that day and right across. But bottom line is that's a good scalp in my opinion and should be utilized accordingly. Next up, let's take a look at a couple other things here. What else is moving this market? And from what I am seeing, Goldman Sachs is down as well. The financials have lost a lot of steam off of that news out of Greece or out of the ECB about Greece. At first, it was reported that they cut the banks off, but obviously they didn't do that. That would have been disastrous. It's more that they're just kind of keeping a close eye. Essentially, what the ECB is doing is sending a warning to Greece saying, hey, you guys better shape up and get something going over there, get a government formed, and so forth. Otherwise, we're going to have to take matters into our own hands, and you guys are going to be screwed. I mean, that's what they're basically sending the signal to Greece as is. Looking at a couple other stocks, Amazon today down 23 cents. Amazon's been a wild trade, and by the way, today's Whipsaw Wednesday, which is the Wednesday before options expiration, always known for being extra wild, and today is no different. I mean, just look at the Amazon chart here. Look at the ups and the downs on Amazon. Ridiculous. And even if you go to the SPY, the whips on an intraday basis, I mean, you had the pop early, then the sharp sell-off, and then the pop on the FOMC minutes, and then the drop here again as we come back into the lows. It is all over the map at this stage of the game. All right? Again, a couple other stocks. What else is moving? Google. I have to say, Google, one of the strongest, if not the strongest tech stock out there today, up over 2%. This is not even at the highs of the day, but it's still up $15, guys. That is a great move on Google today. And again, look at that move. This is actually bearish consolidation failing on this pop today. And assuming it closes above the 50 moving average, you look for in spirit of bullish consolidation to start off of that. And if you get that pattern, you can actually go long on the chart. It's a very solid move on the chart today, especially in the face of a relatively weak market. Nasdaq is down 17. The QID, which is an inverse to the Qs, having a very solid day. The VXX, the VIX, having a great pop as well today. And again, basically, if you're short something, you're doing pretty well over the last couple weeks. One of my shorts, I have a couple shorts out there. One of my shorts is SPG. Look at this breakdown here. Beautiful bear flag. This was a classic. If you want to learn bear flags or in spirit of bear flags, which are essentially a variation of it, just look at that pattern. Down move, inside bar consolidation. You even have a time count there, which is proprietary here at InTheMoneyStocks.com and tells you exactly when it's going to break down. And then look at the breakdown. All right, I think you're going to go to the 50 moving average now on SPG, but awesome. Just absolutely awesome. I'm short this from 157 and change. I think 157.75 is my short entry, and we're now trading at 150.86. So almost $7 in the money on this play, and that's a great one. The other play that I am shorting the market with is by going long the SDS. And look at this move that I've been riding up here on the SDS. Just a thing of beauty. Okay? All right, so that's what we have going on there. And again, folks, I just want to make this clear. The calls I talk about in these videos, the profits that we're making, those come from the research center. All right, if it's a swing trade like SPG was or the SDS, those come from the research center at InTheMoneyStocks.com. And essentially, the research center is geared towards swing traders and investors. So if you're someone who works 9 to 5, if you're more into swing trading and investing longer term, then the research center is for you. And let me just tell you, the research center, we give you the proprietary secrets that we have come up with that work, 8 out of 10, 9 out of 10 times. That's how accurate they are. Much more accurate than any hedge fund out there will be. And we will tell you these secrets. In addition, we give you trade alerts, like the SPG alert, to go short the SPG there. All right, and that's a beautiful trade as it continues to work out nicely as well. And the SDS and many, many others over the course of the last few months as we nailed the cycle top. And I just want to be clear here, folks. The cycle top, In the Money Stocks nailed it again. There were so many doubters out there, so many doubters. Oh, the market's going to go up forever. How many times did I hear that? Oh, the markets can't come down. The volume's not heavy enough. How many times did I hear that? Oh, there's no top level here. The market's going to keep going. How many times did I hear that? Nonsense. Those people don't know anything. Here at In the Money Stocks, we have the proprietary methodology, which tells us exactly when the market's topping. Cycle dates literally nailed. Just to show you here, folks, let's go back in history. Let's go back to the 10-minute chart, and I'm going to zoom out right now and show you. Zoom, zoom, zoom here. Here was our cycle date, right in here. Mid-March. That's your cycle date. And we isolated it down with these trend lines. The market collapsed, bounced, and continues to collapse. Right there. Enough said. I mean, just look. Imagine knowing when the market's going to top. Imagine knowing when the market's going to bottom. Our cycle dates will tell you that. By the way, 7-day free trial to the Research Center. Also, if you're a day trader, if you want intraday action, there's an Intra Day Stock Chat, and there's a 7-day free trial to that as well. Okay? Going back to the spiders, you can see what's going on here. Let me just zoom in. This is the SPY intraday chart. I mean, you're holding on to this level, but this level won't hold for very long. I mean, the more you hit it, you basically have to bounce up, in my opinion, in the next 20 minutes. If you don't bounce off this level and start to rally up in the next 20 minutes, this market will break through. It could even break through sooner. And this market is going to head down to the 132.55.60 level if you get a break here. I'm giving you the level right now, guys. That's where the market's going if you break down here. So again, there's your two scenarios. You basically have 20 minutes for this market to break down. If it doesn't break down in 20 minutes, I expect a rally back to the positive side. It doesn't have to be a big move up, but a rally nonetheless. If you don't rally in the next 20 minutes and you start to break down, you will then see this market go down to 132.60 to 55 on the SPY. That's all you need to know for the rest of the day. All right, I'll be possibly taking some trades out there. I gave out levels last night on gold, on oil, and on silver inside the Research Center. If you're a member, you obviously saw those alerts. Plenty of information, plenty of money to be made, and we will continue to make it here at InTheMoneyStocks.com. Come here, take the 7-day free trial, join the elite, join the pros, do what we do best, make us money, make you guys money. Let's do it. That's what we're going to be doing here. Take care.